Hey everyone, it's Mike Valtos here, and this is the Orderflows market analysis for Wednesday, February 22nd, 2017. And today, the Dow posted its ninth straight record close, although, barely. I think it was just like 0.2% at 2775. Existing home sales came out today, and, they posted some solid increases despite, lesser homes being on the market. And the FOMC minutes came out, and surprisingly, I was a little bit shocked. I thought Fed officials were more ready to raise interest rates at the last meeting, sort of based off of what was being said in the last week. But anyway, we got the next meeting in March, and we'll see what transpires then. And oil moved down below $54 a barrel. So, before we jump in, brief disclaimer, this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So there's 4 tools that I'm going to be showing you in this presentation. It's the Orderflows Trader Footprint Chart and a few of my proprietary indicators, the flip, the U-turn, and the transition. So, it was very, very uneventful day in the S&Ps. And, we just looking at a 10 range chart real quick, I'll pull it in. It was basically flatline most of the day. There really wasn't much. We did have the Fed minutes come out, but still beyond that, basically between 55, and we got down to 55 and a quarter, around 6 in the morning. Our overnight high 63 and 75, 63.75, and we just surprisingly we traded in that range the entire day. Off this low here, you did have a divergence, but we did sort of get up near the high just after 1 o'clock, but for the whole entire day we've basically we were contained. So it's one of those narrow range 7 days. Probably I haven't looked at a daily chart, but out of these very quiet days, oftentimes that's going to lead probably tomorrow or the next day into some pretty volatile market conditions. I wouldn't be surprised to see the market put in a big move either tomorrow or the next day. That's what I would be looking for after a day, like today, where you're trading in such a tight range. Think of it like this, right? It's a rubber band. Take the rubber band, wrap it around your fingers, and then let go. And you see how the rubber band just snaps everywhere, right? Well, not everywhere, but picks up a lot of motion and spins around and slaps and hits you in the face. But regardless, the level I was looking at today, which I'm surprised we didn't reach, I thought there was a few times we were going to hit it. Of course, we'd have to take out the high. Was yesterday's high at 23.65. I even drew a blue line in there. I'll keep it in for tomorrow. I wouldn't be surprised if we make a run up at it. But this morning in the order flow, there were some false starts. Go to here to where the cash opened. This is after the cash, 8:35. This was the Delta surge. Again, I really wasn't interested in it. Then coming down here, you have the 3 in a row, 1, 2, 3, and you ended up with 4 ratios. So you got 1, 2, 3 ratios, and then a 4th one. Then the green bar. I like to get the green bar in here. So I'm looking for a pullback in between the 3rd and the 2nd bar, between the points of controls, which would be here at 57 to 57 and a half. Kept trading down. Then we popped back up here to 6.5. Got this doji bar here. Then we pulled back up to 7 1/4. But again, it's quite far removed away. I don't like to get a signal here and then be taking the trade way over here. I'd be looking to take the trade within the next bar or 2 or 3 even. Once you're getting 4 bars away from, the last bar of a 3-bar setup, do you really want to take it? It may work, it may not. But really, I'm looking to get in a little closer to, where the entry, where the signal is kicking off, not, after you make a little bit of a move down already, then start retracing back up, because what's going to happen oftentimes is, you're coming down, ideally you'd like to be getting short. You'll be liking to get this green candle here and get the pull back within this bar or this bar, and then make the move, not go down, continue on down, and then get a pull back up here, because what's going to happen oftentimes is you're going to keep going down, past your entry, past your signal bar. You get down to a low area, and then you start working your way back up, and then, at this point you don't really want to be short anymore, because it's going to have a tendency to keep going back up. And we just sort of hung around here actually, and eventually we sort of came back up. But even if you got shorted here in between these two at 7 1/4, if you're miraculously you were able to sell 7 1/4 here, or say you sold 7s, this is at what time is that? 8:42. Then you're just hanging around here all this time. It's going nowhere. Just don't stay in it. The move is not happening at this point. Get out. Then there was another thing came up here. Now this yellow line here, right? That's the opening price, and on days that's going to be trendless. Or I'll say trendless, but no direction. You tend to find the opening price and just sort of hang around unchanged all day. And there was a move here. I thought, maybe this is it. This could be the area where we pop up and take out the high. This was around 9:38 this morning, and so we're above the opening price. The value area at that time, was down in here. Much lower actually. It was around 58.5 was the upper area of the value area. So we're moving away from value, right? And I'm always looking for the times when the market's moving away from value to find another value area. And I'm thinking, hey, now we're possibly doing it. We got the delta surge kicking off. We've got a stacked imbalance here, and I thought maybe we could. This bar sort of ekes up, and then you run into this bar, right? The high is this green line, high of the day here, and remember it's 65, which is just above is yesterday's high. So I thought, looking at this, hey, maybe this is it. Maybe we're going to finally take out the high. But what you get up here, right? You get this, what people like to refer to as minus development, which is, the market not doing what it's supposed to do, right? Which is just as important as the market doing what it's supposed to do. People get so caught up trading, with indicators that, if the indicator says buy here, right? It doesn't say, well, if it doesn't buy here, if it says buy here and sell there. But, if you're reading the order flow, you could see this minus development. So, even though normally, these imbalances here, buying imbalances on a bar that's turning down, that's minus development. Why? Because you got these buying imbalances. You expect the market to continue up, keep going up, right? I mean, normally when you get a couple imbalances stacked on each other is buying imbalances, it's bullish for the market. But in this case, it didn't happen. This is minus development, and what happens is the market comes down. So, at this point, what's causing this minus development? What's causing that to happen? Well, you got to imagine, right? This green line is the high, and we're finally getting on the other side of value area, right? We're trading high. We're above the opening price. We're up here near the highs. People are coming in and saying, hey, this is it, especially after, for the last couple of weeks, been almost every day we've been making new highs in the contracts. And now it's 9:40 in the morning. We're up near the highs. People are saying, hey, I better jump in. We're going to go rally 10 points. So that's why you got all these buying imbalances here and here, right? You've got aggressive buying, people lifting the offers. I don't know if they're retail traders. I don't know if they're institutional traders. I don't know. All I know is they're wrong, right? That's what the order flow is telling me. The price action in the order flow is telling me, because why aren't we trading up here? Why didn't we take out, the high at 3 3/4 and trading 4? It's because there's sellers up in here. There's people up here to sell to the buyers, willing to offer it. And even when it goes bid here, 1,794, sellers came in and sold it to them, right? And then the market drifts back down. So, this is a case of the market not doing what you'd be expecting it to do. Everyone's piling in. You've got the aggressive buyers. You got these big imbalances. But at the same time, it's met with resistance. It's met with sellers, people that got a lot of supply up here that they're willing to sell. So, this is at 23.63. And we sell off, back down around the opening price at 60, just sort of hanging around there. Again, I can't get interested, taking any sort of, imbalancers or whatever. around the opening price, because on slow days, look at this, you've got imbalance, you got point of control right at the opening price. Again, another one, it's just lining up right there. No direction whatsoever at all. Then we start creeping back up again, 62.5 here. You've seen some volume come in. You've got a buying balance in there, and the market gets smacked down again. This arrow is drawn by the software just to highlight, hey idiot, you've got a stack buying imbalance at the top of a red bar. It's a ratio as well, so it's telling you there's some stopping volume right here right now. Then you just sort of hang around here, 1 bar, 2 bars. You do get up to the next one, and then you make the move from so if 62-ish area, if you're getting short here at 62 based off of this point of control at the high, this arrow telling you, hey, there's a buying imbalance at the top of the bar, which is on a down candle, which is bearish, right? And I said you just hang around here. It does get up to 62.5 before selling back down, down below to the 58s, 57.5. This here is the it's 1 o'clock at this point, honestly. You had the minutes come out, FOMC minutes come out at 1. I don't think you'd be trading around that time anyway, but nevertheless, reading what's going on in the order flow, this is the delta surge, giving a buy here, and just trades up a little bit. But again, we just sort of hang around this opening price. It's really a directionless day. We get back up to 2, again hit 2. There's just nothing, then we close the day up here at what was that, 2.25. So not much going on in the S&Ps this morning, really, to talk about. So let's take a look at look at the 5 years, right? I have the 5 years. 5 years were interesting. I'll take a look at the bonds in a second, but the 5 years, what I found very interesting, and it's something that, again, you can only see if you're looking at the order flow, and to a certain extent the volume profile. Is this was at around 8:45 this morning. This area in here at 118 even. Look at this volume you're seeing here: 6,000, 3,000, 4,000, 10,000, 4,000, 5,000, 2,400. Add that up real quick. Just roughly 6,200 plus 3,700 plus 4,700. That's already, this is, these 3 prices here is already almost 15,000 lots. Then you got another 10,000 and 4,000 cents. So this is 15,000 here plus another 5,000 plus another 2. So this is over 20,000 contracts here. So 15,000 at this level. I'm just talking these 3 bars here. I'm not talking about anything else. Your point of control for the day was, at this point, was obviously this 118 or 117.31 and 3/4. So you got 15, you got 10,000, 15,000 there, another, what is that? I say 20 some thousand. So, 30 some thousand contracts traded within, a half hour right at this area. So what I'm looking at, I'm looking at it when we're trading down here at 31. If we can stay down here, it could be very bearish for the money. This is your resistance level, right? And so we pop back up and we get through it actually by a couple ticks here. It's not the end of the world, right? When you're dealing with resistance levels or support levels, people can tend to get fixated thinking it's got to be that one price, 118 even. So if we trade 118 even and a quarter, oh, the level failed. No, it's not. Sometimes you poke through it for whatever reason. Okay, just because you poke through it by a tick or two doesn't necessarily mean that it fails. And what happens, over the next hour, 9 o'clock, boom, 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 from 118 even, we'll call it 117.31.5. Where do we trade down to? All the way down to 28. And even lower later. Again, I'm not going to say you'd be holding it all the way to the announcement of the minutes, but we did trade all the way down to the lows. But realistically, from 117.31 rather, down to 117.28. That's a beautiful move to get in the 5 years in an hour or so. Now the bonds, bonds wasn't as pretty as the 5 years were. The 5 years, it really just stood out. Where's my bond chart here? Whoops. Bonds and fives, move together, but sometimes it takes a while for them to move in the same direction. One may be ticking up a little bit while the other one's ticking down, and back and forth like that. But this is the bonds this morning. Really wasn't much either in the bonds, just like the S&Ps. I didn't really find anything worth trading, but where are we here? Go back here. We had the high. This was interesting. We had this high here at 750 this morning. You do have a divergence, nothing else. You just sort of go sideways. You trade back up to it. You get within 2 ticks of that high. You trade back to that point of control, right? Take this off. Make that a little smaller so it's easier to see. So what do you got here? Point of control of this bar is right here. Where you trade it right back up to it. This is a setup that I have written about many times, and it's on my website. I've recorded multiple videos on it. It's called the O2X, and what it is you have the high, and you pull back within 2 ticks of that high, literally 2 ticks, and your stop is just going to be right here, right above that high. So you can be getting short at 04. It did go bid there, so if you were working an offer at 04, you would have been filled, and your stop's at 07, so it's a 3-tick stop. And we came right back up there to 04, and then sold off, all the way down to the 20s, the mid 20s. Eventually, we did go lower, but for me, getting 5-6 ticks, out of a bond trade is good enough, especially if you got a 3-tick stop. You get 2 to 1 is good. You could have been patient and held on, for another half hour and gotten a heck of a lot more. It traded all the way down to 08. So again, I'm not saying you'd be holding it until the FOMC minutes came out down in here. Oh, well, it's not down here. This is about a half hour before it opened. Now, I talk about when you have multiple divergences, we'll look for the market to keep going lower. Although, what's the time? 12:51. By the time you got the third divergence, 1 o'clock is when the minutes come out. You don't want to be sitting in a trade thinking, I think this market's going to go lower. Then you got to sit through a big fundamental release, the minutes. So, and then you can see how it just snapped, this is 1 o'clock, 1 o'clock and 2 seconds, 9 seconds, 20 seconds, 54 seconds. So, this is 1:01 and 35 seconds, 1:02 and 19 seconds. So you can see how volatile it is when the minutes were released. So, anything you're doing, right up to 12:50, forget it. Forget it. You can't take that analysis going into the release of that report. So again, and then after that, there's some movement, but really at that point, I'm really not interested. Even though you do have a ratio bounds low here, blah blah blah. Single print here. We trade back up there twice. Okay, but honestly, after those minutes come out, I like to give it at least 15 minutes to settle down and sort of the market to sort of find its footing back. And then where were you? You're back at unchanged. So, those were the order flow. Now, when you're looking at the indicators, we'll start with the 987 charts today. I haven't looked at all these charts yet, actually. I've looked at a few. I was watching a few of these, but this one I haven't looked at, but I want to pull it up. I'll talk about it. Nothing really in the euro currency. Go back. Anything earlier? No, nothing earlier. So you had 2 signals here, this one, and then this one. This one worked. This one obviously didn't. I'm not going to hide it from you. If it didn't work, it didn't work. I'll show you. Bonds, bonds were nice. Honestly, I wasn't watching it on the bonds. I didn't notice it until 2 o'clock. But this is the transition, right? Settings, same settings that's on the euro currency. 3 100 400, 3 100 400. Look at this. Go back. It's overnight. Nothing. Well, basically since 7, there's nothing. You got to sell here. at what is that, 151.28 area, between 28 and the figure. But that's it. What did it do? It sold off all the way down. Again, I'm not saying you'd hold it all the way up until 1 o'clock, but it's just sort of going here, just poking in your favor a bit, hanging around break even before it makes the nice move. Again, this is a from I don't want to say from 151.28 to 150.28, but that's a $1,000 move right there on a one contract. So that was it in the then later here. Okay, this is just around the close, 2 o'clock. So okay, so there were two trades in this one. Yeah, it did sort of go down lower. Right now we're in the evening session. We're trading 150.114. So, but again, I'm not saying you'd hold it into the next session. By 2 o'clock, I'm done with the bonds. 2 o'clock. Why? That's the old floor close hours, and why did the floor close at that time is because that's basically when the cash market closed. No point in trading bonds when the cash is closed. Now, E-minis, 987 tick chart this time. Again, these have been the 987 tick, right? The bonds, euro currency, now the E-minis. So here, this is around 940, get a sell, boom, boom, boom. Again, let the market take you in. Just because you get a buy here, just don't go ahead and buy and then place your stop down there. If you could, well, think about it. What would you rather have? Rather have give up a 2 ticks for the market to take you in and get a more accurate trade, rather than risk a point, 4 ticks and get stopped out. I'd rather let the market take me in, like this one, right? You have your low of this bar, so you take your entry, and you look, okay, let the market take me in. So let's say this low is 62. I say, okay, if we trade down to 61.5, I want to be in. Like here, it's 60, we'll call it 60 and a half. Okay, if the market goes up to 61, yeah, okay, then I'll be in. Okay, it doesn't, so you're not in. This one, this would have taken you in. I don't think you would have got much out of there. You probably would have scratched this other trade in here. This one, I don't think you would have been taking it, because even though it did sell off, it looks nice. Again, it's right going up until 1 o'clock, and I wouldn't be trading anything at 1 o'clock. Crude, let's see if I got a crude chart in here. 987 tick. I don't know what there was on the crude. I said, crude is around 54 bucks. So there were some sells here, it looks like. Okay, so going back, here's a buy. Started poking up, didn't work out. This one, the next bar, no. Then here started giving you some signs. Okay, maybe. This one, you're only talking 47 down to 46. You should be giving it more than 1 tick, I think. Like here, I'm not saying, oh, this low is 54, you gotta get in at 53. No, realistically, I'd be looking, 51, 52, 51. This one probably would have and stopped you out. This one, again, some similar. 54, got down to 52. So I don't know. That one is probably safe to say it didn't work that great in the crude. But, there's in a couple markets, there was lights out. The flip real quick. This is my Dow 10 range chart. Yeah, this one didn't really go anywhere. We gave you a sell here. Did go down, 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 but still not much to get excited about there. What else? Alright, this is the U-turn here. So a 3 range chart. Again, I'm not really too interested, what's going on at 5 or 6 in the morning, but there is, did give you a buy right on the low of the day. But regardless, here, not really. Here, a little bit of something. This high, it did work out quite nicely. This swing low, yeah, okay, I don't know, it'd be close to getting you stopped out. This one didn't work out. Yeah, but again, that's 1 o'clock. You're not going to be taking any trades there. This was, 2 o'clock. I'm not sure, if I'd be looking to be trading, after the minutes come out. I mean, really, the market was very dead quiet all day, and then you get the minutes come out, and the market just sort of goes back and forth and is doing nothing again. That doesn't lead towards a good, towards a good, I don't know what the word is, good trading opportunities. You'd want to see that after the minutes come out, you'd want to see, take out the high or the low or something, some sort of movement, but you're just not getting anything. So it's hard to get excited at all on that. The last one I'll show you is so what was that? That was the U-turn. This one is one of my favorites. I'll say my favorites. It's a chart that I like looking at nowadays is the YM, the mini Dow, the 100 tick chart. Okay, let me just get it up here. Okie dokie. Again, stay away from the 1 o'clock time. And going back, this is pre-cash. The cash opens here. You get a sell, didn't work out. You get some buys that did. This sell worked out. This buy worked out. Again, this one sell here, I probably wouldn't be interested because, it didn't go any further down. So, you'd be interested in this long. This one, again, it ticked by a tick or two. Then eventually came through. But, these are much clearer. Right, let's blow it up. Where you get the buy, then the next bar is clearly up. Just like here, you get the buy, the next bar or two is clearly up. Again, next bar or two is clearly up. Just like the down bar here, this up bar here. This one, no. This one, maybe. It's 11 o'clock. And then, going into 1 o'clock, I don't think you're going to be taking anything. 12:30. Again, I'm not really interested in this. I said, you just give it 15 minutes to rest. I mean, even if you took it, you'd be stopped out here at a small, maybe break even. 2 o'clock, maybe you could be looking to take it. But again, I'd like to see some sort of reaction from the market. There was none. We're sort of back to trading nowhere. Late in the day, we did get another after the close rally from 45 up to 70. But that's not much of a rally. This was a nicer one from this area. What is that? 730 up to 765. So, I showed you the three indicators and the order flow footprint chart and how they performed today. So not bad. I mean, in the crude oil, it wasn't that good, but you got some nice moves in the minis, the mini Dow, the bonds was a beautiful move. Let me see if I got another chart I could show you. Again, it's I'm not trying to just pick these charts. These are the same charts that I show you pretty much every single day. The people say, "Oh, you're just showing the charts that it worked." No, these are the same sets of charts I show you guys every single day. The 987 tick chart, the 100 tick, 987 tick chart, on those different contracts, the 100 tick chart on the mini Dow, the footprint chart on the 4-range bonds, on the 3-range S&Ps, and so it's not like I'm out here trying to, just pick these things. And show you, when they work. But anyway, I'll show you this chart. This is the euro currency, right? This is an 8-range chart. Now this is everything thrown up and on there. Not everything, but the U-turn, the transition, and the flip. And it confuses. People tend to think that, hey, if I got one indicator that works halfway decent, if I put more indicators on, I'll be 3 times as good, right? If I've got 3 indicators. It doesn't work that way always. And part of the problem is people don't know how to separate the trades. They think, well, I'll just trade it from here to here and then there. and it's wrong because each one works differently. So just really quick, like the arrow is the flip. The blue and the red arrow is the flip. The hash is the U-turn, and the transition, I don't think there was one on here today. The transition is like a cross sign. Yeah, there's not, but yeah, but anyway, so this is an 8 range chart. So when you throw all 3 up on there, it looks a lot messy, and you're gonna have some that fail, some that this is the transition here. So I mean, you can see here, right? You got this double bottom, you've got the U-turn at a double bottom. Sometimes you gotta apply all your knowledge of trading when you trade. People think, oh, I got an indicator, I can just kick back and print money for my new ATM. No, it's not like that. You still got to think of these things. If you get the U-turn, which obviously a U-turn, it should be a reversal indicator. You should be happening at an area. So if you're looking at it's actually a triple, I'll say quadruple bottom, but again, this is 1 o'clock. Nevertheless, it's giving you those same technical signs. Here you're sort of coming into a base, and here 130, 123, 124. You're looking for a low, you get a swing low, you get a sign here with the U-turn, just as up here. You're sort of peaking up here, you get a sign up here to get short, and then it comes down into here. Okay, at this point, maybe the low hasn't been found yet. It doesn't happen for another couple bars. Then you find your low, and then you go back up, and then you come back in here, you get another swing high, and you work your way down. From this is at 250, 252. Right now in the evening session, trading down here at 61 or 105.60. So it's gone down from basically the 77, 75 area down into the 60 area. And then it's confusing for people sometimes. The more they put on a chart, the more confused you get. I mean, I understand that people think that, hey, what, if I got this one indicator and it works nice, then if I just put another indicator on, it's going to give me more trades and more trades. No, don't do that. You're going to get yourself in a lot of trouble, because then you're going to be getting out of trades too early, because there's a signal here, and then there's a signal, you have a sell here. And rather than trading this, you get a buy signal here, so you got to get out. This one fails, and then the market keeps going. You could have rode this one out maybe a little bit more. I mean, there's a lot that goes into it, rather than just throwing up an indicator on your chart and and thinking, okay, I could just turn it loose. And especially if you don't understand how to use it, I get people that don't understand how to use it. I mean, no offense to them, but at least take the time to learn what what you should be looking at, what you should be looking for in terms of is this a reversal indicator, is this a continuation indicator, or what? I mean, oftentimes people, I don't care, I just want to put it on my chart and turn it loose and get to work on it. Let's see if there's any other useful charts I could run through real quick here. I want to put that on there. I thought I had a 1-minute chart of the E-minis. Nope. But anyway, just bear with me for 1 second. I can't find it here. I wanted to show you another chart of the U-turn, but I just can't find it here. Okay, wait here. I think I've got it. Okay, so anyway, this is a E-mini. It's a 1-minute chart. Again, this is with everything, with the kitchen sink thrown on it. Let's make it a little bit bigger so it's easier to see. Scrunch it up a bit. So again, this hash is the U-turn. This looks like a square box. If you open it up, it's actually a cross. That's the transition. I mean, you could change all these things if you want, but let's just sort of scroll back to around the cash opening and walk you through it here. Cash open. Okay, so the U-turn is giving you, here a couple buy signals. The market goes up. These sell signals don't work. The market's going a little bit higher still. Again, this one fails. Transition sell comes right down into this low where you get a a bullish signal. Again, I always say let the market take you in, right? Just as here you have a sell signal. Well, which way does it take? Okay, if it's a reversal indicator, okay, you want to move to reverse. This I don't consider a move that you're reversing. This I do, right? You're coming down here, you get a buy signal, and then you're starting to go up, and it's not really that much higher than any of these previous bars. It's an equal high to the previous bar, and even the fourth bar and fifth bar it's still below. So it's not really a move to reverse yet. So people say, yeah, it gives a buy here and it gives a sell here. Well, it's reading the order flow, right? It's not a red light, green light trading system. Read what's going on in the market. So if it's a reversal, the U-turn is specifically by the name U-turn means reverse. So if you're trading something to reverse, have a move to reverse. You don't have a move here that's ready to reverse. So if you could overlook this, at least you would have got this move, and then you have a move up here that's giving you a sign to reverse. So you go from there down to here. Again, this is a very tight range day. These buys, it just goes sideways on you here. Again, this one, yeah, maybe, but it just goes sideways on you. Again, another one sideways on you. This is coming into the FOMC announcement. 2 o'clock. Is this a move? Honestly, you ask yourself this. You're looking at this. So you're coming up on this signal here. Okay, it's 1:55 in the afternoon. Okay, I got a signal. What should I do? Get short? Well, it would probably be a lot more efficient if this bar was trading up here around 62.5, not at 60 or 60.5. Which is where you've just been trading. You've been in this zone, in this range for the last hour. At least up here at 2, right? You have a move up. You've been working your way up. That maybe it's a decent location, trade location for taking a short. These I wouldn't be interested in getting a long off of, because that's where you've just been, hanging around, trading at these areas. At least here is after a I'll say a move, because this market didn't really move today, but would you rather be getting short at 62 or down here at 60? And then the market's just going sideways, you get some back and forth stuff here. This is right ahead of the close. We reopened. We're in the night session right now. I'm recording this. It's 5 in the afternoon, 5:17 or whatever. And so anyway, we're trading down here at 62 right now. So anyway, so thanks for taking the time to watch this. To learn more about the trading software and these indicators using this presentation and how you can profit from order flow trading, visit my website, www.orderflows.com. And thanks, and I hope to see you on the inside. Bye-bye.